Today, we will talk about how to qualify for a mortgage with bad credit. Let's have a look at the details. Your credit history is one of the most important details lenders consider when approving you for a mortgage. Bad credit or a low credit score will compromise your ability to get a mortgage, as lenders will consider you at risk of defaulting on your loan. Obtaining a mortgage has become even more difficult due to the struggling economy and the record number of foreclosures in the housing market. However, it may still be possible to qualify for a mortgage and buy a home, even if your credit history is far from perfect. The first part is organizing your finances. Get your credit score. To qualify for a mortgage, you will need your credit score. Your credit score is a 3-digit number derived from your credit history. It is used by lenders when you apply for a credit card and is a key factor in receiving a mortgage from a lender. Understand what qualifies as a bad credit score. In general, lenders will be more willing to approve a mortgage if a person has a credit score of at least 620. The best credit score is around 850, but it can be difficult to achieve such a high number, especially if you are in a younger age bracket and are trying to purchase your first home. Maintain a steady income. When lenders look at your mortgage application, they will take into account your ability to pay your current expenses or rent, utilities, credit card payments, on time every month. They will also check that you have been employed with a steady income for at least 2 years and are making enough money to pay all your bills every month. Reduce or eliminate your debt. Debt from student loans or overdue credit card payments will affect your credit score, as about 35% of your credit score comes from your payment history. Focus on reducing your existing debt by always paying the minimum amount of your credit card payment and your student loan payment on time. Adjust your debt to credit ratio. To qualify for a mortgage with poor credit, you may want to adjust how much money you owe, debt, so it is significantly lower than how much credit you have available. Improving your debt to credit ratio is one of the fastest ways to improve your credit score and make you more attractive to lenders. Be prepared to pay more interest on your mortgage. When you have bad credit or a low credit score, lenders may offer you a subprime mortgage. Lenders charge higher interest rates on subprime mortgages to compensate for the higher loan default risk they are taking on the mortgage. And the second part is applying for a mortgage. Speak to a lender. Before you start looking at properties, start shopping around for mortgages. Talking to lenders before you find a home will let you know how much you qualify for in a mortgage. Look into a Federal Housing Administration (FHA) loan. FHA is a division of the U.S. Department of Housing and Urban Development. If you don't qualify for a conventional mortgage, you may want to consider getting a mortgage through the FHA. FHA loans can have down payments as low as 3.5% and are often available for individuals with credit scores between 500 to 620. You can only have one FHA loan, and you can only get the loan on a property that is occupied by the owner. Provide an explanation for your bad credit to lenders. Another option is to talk to your bank about your low credit score and try to explain your credit history. Bring in proof of on-time payments of your rent and your utilities for at least 12 months. If you have a steady income, you should also provide proof of this to your bank. Ask your realtor about a lease-to-own agreement. If your credit score is too low to qualify for a loan from a traditional lender, or you cannot afford a 3.5% down payment on an FHA loan, you may consider a lease-to-own or rent-to-own agreement. Lease-to-own agreements can be difficult to find, and you may need to consult with a realtor to find a homeowner who is willing to enter into an agreement. Most lease-to-own agreements is done with homeowners who can't sell their home at the asking price or when the housing market is a buyer's market. Find a cosigner for the mortgage. If you have family members or a partner with good credit, consider asking them to co-sign a mortgage for you. However, be wary of co-signing for a home you cannot afford. Consider waiting until your credit improves to apply for a mortgage. If your current financial state needs improvement, or if your credit score is too low to qualify for an FHA loan, it may be a good idea to hold off on applying for a mortgage. Thanks for watching this video. Please don't forget to like and subscribe to our channel if you like our videos.